Welcome to you both. Peter, I have to give you some props, though, because you were positive on literally just days ago. You were lamenting the Hong Kong, trade hasn't worked out so well this year. It's a very different story now. Are you in this just for a trade or for something more meaningful and longer lasting?
Well, to what Derek said, the news wasn't necessarily big picture reform like. It was more just trying to put a bottom under the stock market and the housing market. I think, though, when you look out over the next 5 to 10 years, the most exciting growth story in the world to me is the rising middle class in Asia. We're talking about half the world's population lives there. So, yes, China's got its own issues, but it's not just China. It's India, it's Thailand, it's Vietnam, it's Indonesia. And even China's middle class is going to double in size over the next 5 to 10 years. So there is a long-term story to investing in that region. Now, China itself, yeah, you still have to deal with the delicacy of Xi being the authoritarian leader that he is and what he's done in terms of killing the entrepreneurial spirit that brought this country out of poverty 30 years ago. But at the same time, understanding that 15% of the world's population lives there. There is a middle class there that is growing, as I said, and consumer spending that has a lot of power to it if unleashed.
And you were saying you were seeing positive indications from some of the casino stocks that there was a bit more spending going on there. What are your favorite stocks for a position that now might be more open to, to better Chinese performance? What are some of your favorite ways to kind of play these trends?
So coming out of their COVID shutdowns, we wanted to focus on travel and leisure, believing that they were going to sort of live life like we did after the shutdowns. So Macau casino stocks, Trip.com, the largest online travel agency in Asia. To me, those are two of the exciting different areas. And the Macau casino stocks, as of a week ago, were trading where they were in 2022 when the whole country was shut down.
Wow.
So they were just being given away to the point where, like Las Vegas Sands, the company was only given credit for their Singapore business, and you were getting the Macau business for free.
Wow.
So I do think that there's legs to that. The gross gaming revenues are above where they were in 2019, and Golden Week coming up in October is fully booked. So investors were just leaving these stocks for dead.
And it's interesting, Dan. I mean, while kind of putting that into context, David Tepper's comments extended to what it means for Japanese stocks and U.S. stocks. And it was interesting. He said he's concerned a little bit about the U.S. stock market being overvalued and that Fed rate cut might be akin to the 1990s moment when it comes and starts to ignite a bigger takeoff. And his two concerns really about overheating. It was that Japan overheats because of China's, growth pivot now when they have to raise rates and implode the carry trade, or that the U.S. market overheats. I'm curious what you make of that.
Well, listen, on the valuation side of things, listen, David's obviously a tremendously successful investor, so far be it for me to say anything negative, but I would say about valuations, and any strategist that comes on TV or anyone that follows markets closely knows this, valuations are not a market timing tool. And you and I were discussing before we came on air, my favorite observation about the 1990s bull market is the first time really that the concept of a bubble was written about. Floyd Norris in the New York Times wrote an article in 1995 about tech stocks being in a bubble. Greenspan's famous irrational exuberance speech was 1996. And obviously that's not to say that you didn't have Thai baht, you didn't have the long-term capital management, et cetera, et cetera. But stocks obviously marched higher for the next 4 years, and each incremental ascension of stock prices was met with the same cries of overvaluation.
So do you think we're going to continue to march higher now because it's going to consummate in a bubble, or in spite of that, or, at 21 or 22 times, a lot of people would say, Barry Bannister said this yesterday on Power Lunch quite vociferously, that he thinks we should revert back to something more like historical multiples.
Yeah, listen, maybe, and multiples are mean reverting, but in the meantime, you're going to have to explain to me why those 5 or 6 stocks, which are printing EPS, net income, revenue growth rates well into the double, if not in some cases the triple digits, why they're going to re-rate lower. Because that's really going to be the impetus for the broad market coming down. Until that happens, the bias is to the upside. And just at the point on a bubble, I think clearly AI is going to be in a bubble at some point. Mark Zuckerberg.
I mean, look at OpenAI's valuation, or what NVIDIA at 3 or 4 trillion. I mean,
Sundar Pichai and Mark Zuckerberg have already told us we're willing to over-invest. So it's only a matter of time. The question, of course, is whether that time is 2022, 2023, 2024, or 2030.